Hi everybody, it's me, Gregory Mannarino. How are you today? It is Wednesday, May 24th, 2017. Not even 5 minutes ago, we just heard from the Federal Reserve, their minutes from the last meeting. The market has been waiting for this all day long, kind of stuck in a range. Now, let me see what's going on. The S&P 500 is slightly negative as I am doing this video blog. It was higher prior to the minutes. Most of you know I do have a straddle, which I still have on, with regard to the S&P 500 and the volatility index. Check my website, traderschoice.net. I'm waiting for a little direction here. I'll close one side of those straddles and I'll capitalize on whatever direction this market wants to go. I don't care. I don't care. Anyway, actually the S&P is back up fractionally. Okay, so let's talk about a few things here. Huge news. We just found out that the world's second largest economy, China, had their credit rating downgraded. This is the first time this has happened in 30 years. You would imagine in a normal market there would be a ripple effect, but not in this one. Again, I talked about this yesterday. We have a managed market, and the Federal Reserve is going to keep managing it. Speaking of that, again, not even now 6 or 7 minutes ago, we heard from the Federal Reserve and their minutes from their last meeting. More of the same. They want to unload their balance sheet. They're gonna try to shrink their balance sheet here, and rate hikes are going to happen this year. We'll see how that plays out. Again, I do believe that the Fed is going to raise rates next month. The federal funds rate, probably a meaningless amount, and that will affect the short end of the yield curve more than the long end. In fact, it's going to push up the short end of that yield curve. It's going to cause the whole curve to flatten out. That's a big tell, people, a big tell from the bond market that things are not looking too rosy out there. I'm still watching the S&P 500 here, still about at the flat line. Volatility is a little bit low. Well, we'll see how that turns out too moving forward. Again, I have straddles on both of these things. I'm just waiting to close one side of those trades and just capitalize on whatever the hell happens. That's what I'm all about, people, and you know that. Let's talk about a few other things today. Housing, and I've been talking about this now for the longest time. Here's what we found out. Existing home sales fell off of a cliff. New homes also falling off of a cliff. Mortgage applications falling off of a cliff. All the news that we've been getting, all the stats are not good with regard to housing. And the mainstream financial channels want you to believe that we're seeing this type of action because there's just frankly not enough inventory. But what they're not telling you is this. There's not enough inventory that the average person can afford. You understand? That's what they're not telling you. The housing has now clearly risen above the level for the average person to acquire. We also found out that home prices actually did come down in some parts of the country. This has to happen. We are in a bubble with regard to housing. Very easy to see. I go over this all the time. When any asset whatsoever moves above the ability for the average person on an average salary to acquire it, there's a bubble. And it's also no secret, it shouldn't be to you, that the Federal Reserve has reinflated a housing bubble, and there's a reason why they did that. It's a very, I don't even know the word for it, but you think about it. I covered this, but let me talk about it real quick. So the Federal Reserve bought all the toxic assets. Remember, housing was known as toxic assets? After the meltdown there, they bought it. The Fed bought it all off of the banks' backs to make them whole. People got thrown out into the street. The Federal Reserve reinflated a housing bubble, and right now they're talking about dumping their balance sheet, which includes these mortgage-backed securities, which were once known as toxic assets. They're not so toxic anymore. Why is that? Because the Federal Reserve reinflated a housing bubble. There are so many people that argue with me about this. Oh no, there's no bubble in housing. Really? Tell me your justification why you don't believe there is a housing bubble. It could not be more clear to me that we are in a massive housing bubble. The stock market is in a massive bubble. Debt is massively undervalued, and that has caused distortions in every asset class, not just the stock market and housing, but everything as well. So housing is going to become more unaffordable as rates continue to rise. You understand? Could this whole thing backfire and people just start, I don't know, wanting to jump into the bond market, forcing rates lower? I guess they could, but what would force that? I don't know. But it is a possibility, no doubt about it. Let me look here again. Okay, S&P 500 still at the flat line. Volatility still low. Nothing major here after the Fed minutes because I think this is all baked in. It's all baked into the cake. The Federal Reserve is so predictable, it's funny. It's laughable. And we know what they do. Whenever there's a threat to the market, like yesterday, they called out one of their presidents to talk some sunshine up the crack of the market, and the market will recover. And that's just the way it is here. Terrorist attacks don't matter. Threats of war don't matter. Bombs don't matter. Nothing matters anymore. It's a managed market. That's what the Fed is going to do, period. All right, so let's just recap here because I think this is really big. Number one, okay, stock market isn't doing anything after the release of the Fed minutes, which they're now talking about dumping their balance sheet, getting rid of the mortgage-backed securities, which were once toxic assets, not so toxic anymore because they reinflated a bubble. Very evil. That cash there should be going to the homeowners that lost everything. That's my opinion here. It's just it's so ugly in my opinion. It really is. It's so unfair that they were able to do this. But again, these institutions, the Wall Street banks, they never lose. They never will lose, and that's just the way it is here. Housing, it's in a bubble. People, get over it. Seriously, it's very simple to see. The narrative from the mainstream does not make sense. We got existing home sales falling off of a cliff, new home builder homes also falling off of a cliff, mortgage applications falling off of a cliff. We got the median price of a home dropping. Does this sound like an environment where you should be jumping into buying a home, especially in an environment where rates are going to go higher, which will put even more pressure on the average person's ability to buy a house? This is a farce with regard to inventory. Yeah, maybe there's not enough affordable housing for the average person out there because they can't afford it. If that doesn't make sense to you, or the frank imbeciles, and that's what they are, and I'm going to say this on the mainstream financial channels, all of them, because they don't have the balls, okay, am I allowed to say that here? To call a spade a spade. They did the same exact thing at the top of the last bubble. They were cheerleading for housing. Go buy a house now. Do it, people. Buy a house now. And, they're complicit. The mainstream financial channels are complicit in what happened to people the last time because they're doing it again right now. S&P 500 is still at about the flat line. Okay. This China thing is huge. Again, if we were in a real market, the world's second largest economy being downgraded the first time in 30 years, I think that would have a negative effect on the market. But not here. Not here, because this is not real. Nothing is real. All right, pretty much that's it, people. Let's just pay attention to what's going on here. Not sure where the market's going to end the day after it digests what's going on here. Who knows? Could be higher, could be lower. Don't know, don't care. I told you I'm holding straddles here. I'm just waiting for the market to move one way or the other. I'll close one side of the trade, and I'll be happy. It's just so simple. So check my website, traderschoice.net. You can see where I'm at right now and exactly what I am doing. And I'm telling you right here how I'm capitalizing on it. And you can do the same thing too if you're a trader. Let's see what else is going on. Gold is up a tiny bit right now. Silver up a tiny bit right now. Bond market flat. Dollar flat. I got all this stuff right here. And it's so crazy. It's absolutely nuts. All right. With that said, that's it. I'll see you tomorrow. Over and out.